Hi, Tony Heminger. I want to talk today about buying investment property at the top of the market. Now you can avoid the debt trap. I'm broker owner of WIN, Western Investor Network, based in Denver. We're a full-service, client-focused brokerage firm. Everybody knows the real estate market is cyclical. Right now, market conditions favor apartments pretty much nationally, so that's what we'll talk about today. But you can align this conversation with any income-producing property or investment property. There are numerous market factors that can be monitored. But to keep things manageable, I look at just four: rents, vacancy, permits, and absorption. These are the pulse of any market and need to be monitored on an ongoing basis if you're going to be investing in that market. Let's look at the current conditions here in Denver. Vacancy's down, interest rates are low, rents are rising, absorption is high, and we're starting to see a few more permits being pulled for construction. Everyone's talking about apartments here in Denver, investing in apartments. So you want to get in on the gold mine. Of course, you call me, your favorite broker. We find you a nice building. You leverage into it, say 80% loan to value, 25-year AM, 5-year call, 4.5%, pretty basic loan in today's market. Great rates. Rents are continuing to climb, vacancies under 5%. You have a real good investment. You're making money. Let's look forward 4 or 5 years. The permits being pulled continued. Developers moved back, added several thousand units into the inventory. Now, this caused vacancy to move up and absorption move down due to these new units being added to the market. Rents now start their descent, also due to the additional units as well as the increased vacancy. Record low interest rates are behind us. We all knew this wouldn't last forever. Are you still happy with your apartment investment? Let's see how these market changes might affect that. Your cash flow is now on the decline, because with higher vacancy, you have more empty units bringing in no rent. You also can't find tenants willing to pay the same rent because your neighbor is renting for less. So you start leasing your units for less. To fill your vacancies, you adjust your leasing criteria and accept less creditworthy tenants. Less creditworthy tenants cause higher delinquency and higher credit loss. So your expenses are going up. Income down, expenses up. This isn't good. We're not headed in the right direction. But there's one more thing. Your loan has a 5-year call. Say we're 4.5 years down the road, you now need to refinance. Another round of lender fees, and your interest rate will be reset at the higher market rate, whatever that may be at the time. See where this is headed? Income is way down, expenses are way up, your positive cash flow is greatly reduced, maybe even eliminated, maybe even negative. The debt trap. You're working to pay a mortgage and own a property with little or no positive cash flow, or maybe a negative cash flow. This may be okay depending on your situation, but if you haven't planned for this, you're going to lose some sleep. Again, market is cyclical, so if you hang on and endure the pain, it will come back around. I'm not saying don't invest, and I'm not saying don't invest in apartments right now in Denver. I'm saying invest smart. Maybe the top of the market isn't where you should leverage up. Maybe you should sit down with a broker that will counsel you on investment property and not just sell you a building so they can collect a commission. Maybe this broker should own some investment property so they know more about it than how to close a deal. I know just that guy, me. I'm a CCIM, Certified Commercial Investment Member. I'm an EMS, Equity Marketing Specialist. I counsel with clients on investment property, acquisition, disposition, and leasing. If you'd like to know more information, or contact me, just click on the link above this video. I look forward to helping you. And remember, invest smart.